but we want to have our voice heard. And we're here today on Tax Day at the Columbia Post Office here in Columbia, Missouri, basically to send a message that we want and need a peace economy. And this is a critical message for our country to hear right now. Currently, a lot of people don't think much when it's tax day, except I don't like paying taxes. We hear that a lot as we go through talking with people, interacting with people around taxes. They don't like spending money on taxes. And some people say, well, I don't mind because they do some good things. But a lot of people just generally have a notion that if you're going to be out on tax day, it's to protest taxes. And that's not the reason we're here. It's a bit more subtle. It's a bit more of a nuanced concerns or set of concerns that we're raising. And that set of concerns is based on the notion that we need to have adequate taxation to spend to meet the needs that are met in our society by government. And we're talking about public goods. We're talking about investment in people and infrastructure. And those are important things. We need parks. We need to provide nutrition. We need a social safety net. We need housing for people who otherwise can't afford it. We also need things that are just generally benefiting the entire society. Programs like Medicare, Social Security. These are critical needs our society has, and they benefit people of all income strata. Environmental protection is critically important. Working on investments in sustainable energy. All of these things are important. So then the question comes up, well, how do you pay for that? And one of the things that concerns us the most is that currently the people who are most well off in our society are not paying their fair share. They're essentially paying the lowest tax rates that have been charged to high-income earners in the last 80 years. And it's not a good situation. It's a very bad situation in which we've created what's called a structural deficit. What that means is even if our economy was operating at full employment, we would not be raising enough in taxes to meet our expenditure needs. And this is due to a whole collection of tax cuts that were made starting during the Reagan administration in the 80s and continuing into the years of the Clinton administration and then the George W. Bush administration. We've had tax cut after tax cut that have overwhelmingly benefited people in high-income situations. So now we treat capital gains, the unearned income that mostly rich people earn off of appreciated assets, money that they get from selling stocks and bonds, or dividends, they pay at a rate that's less than half of what high-income earners are paying. High-income earners are paying 35% at the margin. Capital gains is only 15%. There's something very wrong with that. When people work hard, you want to reward it. But these unearned incomes, which are huge, are such that we are seeing people get away with paying very low rates of taxes. So we have somebody like Mitt Romney. I need to make it clear, Peaceworks is nonpartisan. We don't endorse or support or oppose candidates, but it's been a very prominent example. It turns out his effective tax rate was somewhere between 13 and 14%. And there's something wrong when people are making lots of money, making many millions of dollars, and paying much less as an effective tax rate than people who are working hard and making $30,000, $40,000, $50,000, $60,000, $70,000, the kinds of middle income salaries and wages that people earn in this society and are paying so much more. So a big part of what we're here to say today is that we want a fair economy, and a fair economy involves taxing according to people's means. And a few ways in which we can tax according to people's means. One is that we can start treating unearned income as what it is, which is income. And when you're talking about unearned income, treat it as income. And I think that's really an important message that everyone needs to hear, that you should not be in a situation where people who are raking in many millions of dollars in income that they're not working hard to earn are being taxed at a much, much lower rate than hardworking Americans. That's one part of it. But another part of it is we need to roll back those Bush-era tax cuts that benefited the top income earners. We currently see that we have a huge portion of our country's wealth and a huge portion of our country's income going to people in the top 1% or the top 5%. We've been handing out a handout here today, given out hundreds of them this morning, and you'll see here that the top 1% has 35% of our net worth collectively. The next 4% has 27% of our net worth collectively. That means that essentially 62% of what's owned in this society is owned by the top 5%. There's something wrong in that distribution. We're not saying everybody has to have exactly the same amount as each other, but we're saying there's something wrong when the 5% of the population has 62% of our wealth, and 80% of our population only has 15% of our wealth, with the bottom 40% having negative net worth. There's something wrong with that picture. And proper taxation that's based on ability to pay, can rectify that situation. So we need to roll back those Bush-era tax cuts. We need to treat capital gains and unearned income as what it is, income. And we need to look at other options. One option that is really worth pursuing, in my opinion, is a transactions tax on financial transactions. You know, we could raise over $100 billion a year with a financial transactions tax, and it would actually have an ameliorative effect on our financial markets. Right now, there's a huge amount of speculative buying and selling that goes on. People are engaged in overnight and even by the hour transactions where they trade back and forth without, just looking to arbitrage, to make money off of slight differences in the price of large amounts of assets. That's not productive investment. That is wasteful and misdirected. What we need to be doing is having people invest for the long haul and invest in ways that actually build up our stock of capital goods that can be productive. If we want to have a productive economy, we need to be doing that. So our basic message is we need to consider things like transactions tax, things like capital gains being treated as income, things like raising the marginal tax rate on people who are making lots and lots of money. And rolling back those Bush-era tax cuts is part of it. The Progressive Caucus in Congress recently came out with a proposal to treat people who are in those really top brackets, not the 1%, but the 1/10 and 1/100th of 1%, with higher income tax brackets. Now, they're not talking about going over 50%, and it's always at the margin. So it's not like every dollar you get is taxed at that rate. But there's no reason we can't get up in the 40% margins. When our country was at its strongest economically and growing most quickly was during the 1950s. And during that era, we had a situation in which we had a 92% marginal tax rate for very wealthy people with very high incomes. And you know what? They paid their taxes and our country grew and people invested and we prospered. And labor was strong. And workers got a fair shake and got an increasing portion of the pie, and we had more equitable distribution. These are important things for us to be looking at as we look to move forward.